Hi there, guys. Welcome to Midweek with Indiacharts. I am your host, Muskan Kapoor, and we're joined with Jay Vora. We're going to be discussing how the midweek situation is and how the market has been before and what we can expect in the future. So I'll just hop into the questions. I firstly want to discuss the US market. So the dollar index we saw made a double top, and people were expecting that we will see like a bullish reversal and it will start going down, but it literally broke its peak and made a higher high. I don't understand what is happening.
Right. So I'll just quickly share my screen to explain that.
Hmm.
So if I look at the dollar index, so this is the daily chart of dollar index. Okay. So what had happened was that dollar index rolled over from 109.28 or something like that. And people thought that it might be a double top. Okay.
Hmm.
Because I mean, 2 or 3 days it corrected, but then it started to inch higher once again. Now, in
Hmm.
this thing, you can notice that the moving averages are not getting breached. Okay, so until and unless that doesn't happen, it would be very immature, or you can say it would be too early to judge a reversal. That is because
Hmm.
when you see at the longer term picture, okay, dollar
Hmm.
index has broken out of this range after almost 6 or 7 after 6 years. Okay,
Hmm.
so in a normal technical terms, okay, whenever there is a trend reversal, you assume that the trend is going to last for a while. Okay, it
Correct.
is not that you see a 6 years kind of breakout and then it will falter in a month or two, or or
Hmm.
3 4 months of rally and it will falter.
Hmm.
Actually, to be very honest, earlier even I was of the view that maybe this is a false breakout, especially over here.
Hmm.
Okay, you can see that in over around this time the range was broken. Okay, and
Hmm.
it fell below the breakout point. Now,
Correct.
generally, when that happens, that is very deadly. Okay. And it can also point out towards the fact that this might be a false breakout. But
Hmm.
once it started, breaking out above this once again and it started sustaining above that, that is when I thought that no, maybe this
Hmm.
breakout is for real. And if you see the dollar index chart, okay, it is nicely moving up within this channel.
Hmm.
Okay, and apart from that, if you see the longer term picture, that is
Hmm.
even more bullish, at least if we go by the channels. So you can
Correct.
see a nice rising channel, and right now we are possibly at the midway. And
Hmm.
even if you see in terms of resistance, there is barely any resistance you can see over here.
Correct.
Okay, so logically, the next move should ideally go towards this 120 level, or
Hmm.
it might be somewhere around this upper end of the channel, which is around at 117 or so.
Correct.
And and this, I'm talking just about dollar index. Okay, if you see
Hmm.
any of the currency, if you see USD JPY, that has broken out of a very big inverted head and shoulders pattern.
Hmm.
Okay, which generally is a trend reversal. Okay, now again what has happened is that this entire range was broken.
Hmm.
Okay, this is, I think, 20 years range that was broken,
Okay.
and it has now started to inch higher. So thinking that it might just stop over here might not be true. In fact, if we draw a parallel channel to this, the target on the upside comes to around 159. Okay, now these are all components of dollar index. When these are bullish, it is very unlikely that the dollar index might reverse unless these sort of currencies give you that indication. Now the other one, if you see, is USD GBP. This we had published today morning only about
Hmm.
USD GBP, and you
Hmm.
can see that over here also it is nicely rising higher within a channel. Okay, you can see
Okay.
all the lows are connected, it is respecting
Hmm.
that, and it is kind of rising higher in a channel. Now even if I see over here, there is room over here. If you see USD CNY, which is the Chinese yuan, HN, I think in this I'll have to open it in my software. Yeah, so this is USD CNY. So you can see over here, there was a big consolidation, but throughout this consolidation, the averages were being held. Okay. And
Yeah.
and after this breakout, you can see a sharp rally. And over here as well, if you see, there is enough room. I mean, the high somewhere over here is at 7.20 and it is still at 6.97. So this also gives some room. So though this is not a component of USD, I mean dollar index, but yes, this is a significant currency. And if this is also depreciating, then there is some issue, or maybe the dollar trade which is happening right now is still very strong. So these were just few components, but if you see across the board, and which we have been publishing on Indiacharts from time to time as well,
Correct.
that all the currencies against USD are weakening. Okay. And kind of India is on the verge of that, which we had shown earlier as well. So if you see USD INR as well, it is kind of consolidating at this point of time. But I am suspecting that once this range is also broken over here, okay,
Yeah.
we might start seeing the next leg of up move. So that can also be a pressure point for the equities market.
Before moving to the next question, I just want to tell the viewers that if you want to get access to the articles that Jay is talking about, you can download the Indiacharts app and you can be an Insider Club subscriber, and you'll get daily updates on all the market aspects, the commodities and stocks and even indices and things like such. So yeah, you can do that. I will link it down below. So now I will just move to the next question that I have. So when you see the US indices, it's just been falling. There's no pullback, no evident things happening. I've just seen it falling. What is happening? Why is it so?
Yeah, so the joke is that the US indices are falling without a bounce, and in Nifty index it is just bouncing and it is not falling.
Correct.
So if I quickly check the US indices, so what we'll do is, last time I just briefly highlighted the indices. Now this time around we'll check the structure of each one of them, so that people have an idea what is happening over there. So first I'll check the Dow Jones index, industrial index. So over here also, if you see, I had pointed out earlier that this had retraced 61.8% of the previous fall. Okay. And now it is faltering from there. So now, if you see, even for this rise, okay, for the recent rise which has happened, over here also the 61.8% retracement mark has been breached. Okay. So when this happens, it is significant. Okay, it tells you that there is a high probability that this low might be broken. And I think if I draw the trend line, it is right at the trend line. So yes, I mean, it has broken marginally this trend line, but I think if I see it in S&P 500, it is right at the trend line. So if you see in S&P 500, it is right at the trend line. So right now, US markets are at a very crucial juncture. So at this point of time, what can happen is that, there could be a small bounce and then a pullback. Okay, this is a possibility because in this entire fall, there has been barely any pullback. There has been 1 or 2 days kind of pullback. But ideally, it is not what we call it as a sustainable kind of pullback. It is just 1 or 2 days pop and then a fall. So a bit of a durable pullback is possible only and only if this trend line is held on. But if the trend line is broken, there is a good chance that we might retest the low of the June low, which was around 3639 levels. And obviously, because this is wave C, so what might end up happening is that this entire move will come over here. Okay. So which I think I have made a video on that as well, on S&P 500 outlook. So people who are interested can look into that.
Yes, it's there on the YouTube channel as well. I will link that
Yeah,
down below as well.
that's right. So right now even S&P is at a crucial juncture. But if you see Nasdaq, if I see Nasdaq 100, that is relatively weak, and that has already broken this trend line. Okay, and
Right.
it is falling. So Nasdaq 100, as it was discussed earlier as well, has been even more weak. Okay, so these are the three indices which I mentioned. Now, if I see Dow Jones Transportation, okay, this has a little different structure, but if you see, it has not broken the rising trend line and it is falling. So if I had to draw a channel, sorry, wait, I'll redraw the channel. So if I have to redraw this channel, and if I say that, maybe it is possibly going to retest the lower end of the channel, that is still some 1,500 points away from the current market price. So which would translate into a 10% kind of correction over here. Then you come to US small cap index, which is the Russell 2000. So over here as well, you can see that it has been falling. Okay, and over here the retracement has been even shallower than the other indices. I think over here it has not even retraced 50%. And remember last time, like I said, that the lesser the retracement, the more weaker that security or that index is.
Yes.
Okay. So this in terms of other indices is even more weaker. So this is how the US markets are set up. Probably, people are not realizing this is because the US markets are not falling. Okay. So the ones who are bulls might think that Nifty is kind of digesting all the bad news, which is good. And eventually Nifty will rally.
Correct.
But the ones who are bearish might think that this might just be a distribution that is happening, and then eventually the Nifty index might also follow suit with the other global indices. So now, which way will it go, that only price action will confirm. But as
Correct.
of now, whatever evidences that we are able to see, dollar index at 20-year high, and like I showed, that there is no stopping over there.
Correct.
So obviously, because the sentiment reading which we had published today had gone to the extreme level, so there might be some sort of pullback that is possible in the near term, but that cannot derail the rally which dollar index is seeing right now. And if the major trend of the dollar index is up, then I doubt, whether uh, equities market will survive, or for that matter, Indian markets will survive.
True. So because you just cracked a joke about how the US markets have been and how we are waiting for Nifty to fall. Nifty is just very confusing. It's just narrow, very small ups
Yeah,
and downs, and has been in the same range line. Can you
yeah,
elaborate on that as well?
yeah, sure. I'll show you the chart of Nifty.
Hmm.
So if I see Nifty index, now today's data is not updated in this one, but essentially what we are seeing is that there was a big sharp rally over here, and then
Yes.
this 5 days of candle are within
Hmm.
this bar. So that is
Correct.
what we call it as an inside bar pattern.
Hmm.
So in an inside bar pattern, what happens is that the highs and the lows becomes very crucial. Now index has to break out one way or the other,
Yes.
for the trend to confirm. Now,
Hmm.
which way will it do is a big mystery right now. But just in terms of levels for the viewers, I'll just highlight it. The low is 17,401, and the high of this candle is 17,777. So either of this level needs to be broken, at least in the short term, to see a trending move. And yeah, once the breakout occurs, at least we might be able to see some bit of directional move. But right now, as you know, the market is dull, and which way will it go? That needs to be seen. But now looking at this, I had highlighted this in the previous interaction as well, that the Nifty small cap index is making higher highs. Okay,
Correct.
but the Nifty index is making lower lows. I mean lower high as of now. So which way will it go? I am not too sure. I mean, all the data points which we have discussed, in this interaction are all pointing out towards a correction. But now, I'll show some interesting charts, which I myself I keep seeing that as and when I want to think that have things changed. So first we'll go to the Nifty mid cap chart. Okay. Now I'll tell you my experience and how things were at my end. So while I was seeing this rally, okay, in 2018, okay, when the index had started to fall from here, okay. So I had, just I just drew a channel and I saw कि अरे ये तो इतना नीचे आ रहा है. So will it come? Was the question. So I was like, नहीं ये तो नहीं आएगा. We are in a bull market. I don't think that is possible. So that had happened. Okay. And over here, then, like I mentioned earlier as well, that the breakout occurred and I thought that no, this is it. I mean, there might be a big rally. So this is where it was kind of my early days of the career. So when you are new, or when you are early to your career, you are always kind of a bull because you haven't seen past correction. Yeah. So you haven't seen the past corrections, how ugly it can get. So this was the case when eventually what happened was that it went to the lower end of the channel due to COVID. Okay. And then only it started its next leg of up move. Now, there is one more interesting thing which I wanted to highlight, that over here, when this top had occurred, just I think 3 or 4 months or something like that, something prior to that, inverted yield curve had happened. Now, what is inverted yield curve? It happens when the smaller duration bond interest rate goes above the higher duration bonds interest rate. Now, these are very abnormal situation, right? Because mera risk in a 10-year time period is lot more than a 2-year time period. Okay. But what is happening right now is that the 2-year interest rate are are higher than the 10-year interest rate. Now, this calls for some bit of abnormal kind of situation. Now every time you see this happening, people say that this time might be different, this time it might be because of XYZ reason. So the same thing had happened over here, and because after inverted yield curve happens, it takes generally 3 to 6 months for that to play out. So in that 3 to 6 months, essentially what happens is that there is a blow off rally, and when this blow off rally comes, that is when you tend to forget that inverted yield curve had happened. And inverted yield curve in the past, whenever it has happened, it has called for a recession, and the corrections have been brutal in that case. So this had happened over here. Somewhere I think in the start of 2018 or something like that. And then even just prior to the pandemic, there was an inverted yield curve that had happened, and then that triggered a pandemic. So inverted yield curve have occurred in this phase as well as we speak. I think some 1 month back or few weeks back, I think it has the yields have been inverted. Okay, so now this is happening right now as well. Now to imagine that Nifty might start a big third wave, or the small cap and mid cap index will start a big third wave, I'm not too sure, honestly. So how will this play out? But if I see this simple channel, okay, I'll be a little skeptical right now. And like I have been highlighting that correction in the US market and all is possible. So I
Yes.
would want those risks to subside. The
Hmm.
moment those risks subside and I get a little more clarity over there,
Hmm.
I would want to think that the correction is over and probably, we are heading higher. But as
Hmm.
long as, there are risk in US indices, I don't see those inverted yield curve and all, I mean, again, starting to rise higher and,
Yes.
getting to a normal level. So, until that time, all this risk will be there. So I
Hmm.
showed about Nifty mid cap index. Now this is Nifty small cap index.
Hmm.
And if I see the monthly chart over here, okay, and I draw the trend lines. So it kind of suggests the same. Okay, it is almost at the upper end. In
Correct.
fact, this is even more dangerous, especially if at all this is a euphoric move. Okay,
Hmm.
because in a euphoric move only you would see channels breaking on the upside. That is because of the over optimism. And later
Hmm.
on, when people realize that things are bad and all, that is where the correction happened. So I would want, this stuff to be resolved,
Hmm.
these things to be resolved. And once there is a breakout and there is a confirmation and the macro start looking good, there is always a big runway, because the
Correct.
ones who are not following Elliott wave, they don't know that
Hmm.
if at all this high is broken and the next leg of up move starts, then the equality level comes to around 85,000 level. That might
Correct.
look very absurd at this point of time, but you would see that at this point of time also, once this correction hold played out, so from the low it had almost achieved this equality target of the previous move. Okay,
Hmm.
so this time around as well, that is likely to happen. And if that is likely to happen, so I'm okay to miss out on this part, which is over here, and which is the gray area right
Right.
now. You don't have certainty, because what will happen is that if at all market corrects and the evidences which I have seen actually plays out and eventually the market corrects, I would feel
Hmm.
very bad
Yeah.
because I knew all this, and
Yes.
then I did, and I just reacted to it because the markets were not falling, and I thought that this time it's
Hmm.
different.
Yeah.
Trust me, I've heard so many times that this time it is different, this time it is different.
Hmm.
It never happens, frankly. It might be one in that 10 times, but I don't want to bet on that one time. So
Correct.
rather, I would want things to subside, because that is what is happening right now. Nasdaq is falling, US is falling, and India is being sideways. So this is the best case scenario that can happen. So if at all, it so happens that Nifty doesn't fall at all and the US indices keep falling, I
Hmm.
would love to see that India, gives that relative outperformance, so that once
Correct.
when the dust settles, the next leg of up move will be even more strong in the Indian
Yes.
indices.
Hmm.
So while we have been saying that these are the risks that people
Hmm.
should know. So what people don't understand is that it's okay sometimes to let go this small patch when you know that you
Yeah.
have a big runway. And
Correct.
rather, if you get things at the lower levels, then you
Hmm.
always have that opportunity to load in.
Correct.
So this is the whole point. I mean, the best case scenario for the India is that it remains sideways, and the bad case is that it falls along with the US indices. So this is somewhat a risk that people have to deal with it right now, because
Hmm.
dollar index at 20-year high, US indices falling. In fact, I
Correct.
have not shown emerging market index. The
Hmm.
emerging market index, there is no signs of a pullback at all. They are not even crossing the 20-week average right now. So the pullbacks are that shallower, and
Yeah.
and they are getting affected mainly because of dollar index only, because whenever the dollar index rises, it is bad for emerging markets. But for some reason, Indian markets are holding out very well. Now, whether this is accumulation or whether this is distribution, that time will tell. Okay. But we need to be careful. And the other thing is that, see, if I see for the small cap index also, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is 12 week of positive weekly close, and that too in an uncertain environment. Now, it is possibly too good to be true, to be very frank. But if at all, what happens is that, see, for every move there will always be a pullback. Okay. So this is kind of now turning out to be a patience game, wherein this move has played out. Okay. At some point of time, some bit of correction will come into play. So that is the time to assess, whether things are bottoming out or it is going to get worse. So yeah, so this is the final, submission from my part, that things are actually looking very, very gloomy in the Indian indices. But trust me, I mean, the way macros are playing out, I mean, it is hell lot bad. Okay, somehow the Indian indices are not getting affected, which is actually a good thing. Okay, but the only thing is that let the dust settle down when
you have to be patient.
Yeah, exactly. When the things are clear, you would find even more clear opportunities, because what will happen is that once the dust settles, you would know which stocks have outperformed, which stocks have not broken this low or the previous low, say February low and all of that. When you get all those data, you can actually come up with more stronger ideas, and you will have a higher probability to win as well. So yeah, with that, I mean, with that, I'm done, and I hope people find this session informative.
Definitely, we know that we don't have to be as impulsive as we think we should be looking at the market, and we should sort of stay calm and understand what's going on before making a decision and then getting stuck in that loop. Nobody wants to get like in that phase. So yeah, it looks too good to be true, but will it stay is what will determine if we should be in it or not. So yeah, that's how it is. Thank you so much for this session. It was really helpful. Thank you.